I told you 5 mistakes that you can avoid as a real estate investor. Would you want to know them? Hey guys, this is Naomi Brown. And when I was a kid, my parents had a business. Eventually, there was an accident that happened. They were sued. They lost their business and everything they had. I don't want to see that situation happen to you, but I have worked with so many investors who have worked really hard and have made mistakes that have cost them a lot of money along the way. So here's 5 things to keep in mind. First mistake is not seeking out qualified professionals or not doing it soon enough. So I had a client who was a developer on the side, and he had his main business, and his accountant classified his development income as long-term capital gains, which was incorrect for many, many years. And eventually the IRS caught up with him and slapped him with so much money and back taxes and fines. So make sure that you have the right professional for what you're doing as well. That's just as important as having the professional, okay? Number 2 is having way too many bank accounts, but not the proper bookkeeping. And I can't tell you this enough because there's so many investors I've talked to who have lost money because they have not tracked their money properly and had way too many bank accounts than they needed, but didn't provide for the proper accounting. So make sure that you're putting your attention there, even though, yes, I know it's boring and it doesn't seem like it will yield much result. It's important to track. The third thing is partners. And that's probably not going to come as a surprise to a lot of people, but make sure when you're entering into partnerships that it's documented on paper and clearly laid out who's doing what, and especially who's responsible financially for what. The fourth thing is putting your real estate in an S corporation. Now, it could be really proper for you to have an S corporation and whatever type of business you are doing. But if you put long-term real estate within an S corporation and then want to do a cost segregation study, a lot of your losses can be trapped inside the S corporation because rules about not taking out a loss greater than your basis. So don't put your long-term real estate in an S corp. Number 5 is, and this is also really common, not getting started. There's so many people who I've talked to who want to do it, but they want to make sure they do it right. And it's important to do it right, as we just talked about with the other four points. But the worst mistake of all is not doing it. Sometimes you got to make mistakes to do it, but please go ahead and do it. And if I can help with advice, with finding the right property, give me a call. Love to talk to you and help find the right property.